Hello guys, welcome back to another video. It's Boy Trader, and in today's video I'll be showing you guys how to take advantage of support and resistance levels, how to use these levels as your level of buy and sell levels in the market. So you all know, whenever you want to analyze the market, start from the higher time frame, the daily time frame, or the weekly time frame, but preferably the weekly time frame. So let's head down to the charts, and we'll be analyzing 25 index. So let's head down to the weekly time frame. You all can see on the weekly time frame, we first identify the overall market direction, which is very important. You have to know where the market is headed to. You all can see the market is headed downwards, which is the number one information that we need. You don't know. You all can see the market is headed downwards. So next is to spot our levels, our support and resistance levels. We can call this level a resistance level, a support, a resistance level, because you all can see when we zoom into the chart, you can see how the market rejected at this point with couple of candlestick wicks. You all can see at this point the market rejected here and did the same thing here as well, These are levels that we are sure of the market rejected properly. And at this point, you all can see we had this strong impulsive move that the market pushed up for weeks. Now the market's really pushed up strongly, like the market had this bullish push for weeks now. Let's check how long this market has been in this long-term bullish move. Okay, since the beginning of this year, basically the market has been in a very strong has been on a very strong bullish pressure, and we actually got to an important level. This level was visited in October last year, and this level gave us this push to the downside. This particular level gave us this push to the downside. You all can see this particular push to the downside. So this level, the market actually got to this level at this point. So as the market got to this particular level, we all can see that we had this week, the market gave us a fake out move. Like on the weekly time frame, you can see the last week, that the last weekly candle that closed. You all can see how the market closed with this week. Let's identify it. See how the market rejected at this point. Like you can see the week at which the market created on the weekly time frame. When the market got to this zone, the market gave us this strong push to the upside, then closed below this level, which is the number one information that we need. The market closed below this zone. The market didn't closed above this level, and you all know that on this level was last visited in October last year, and right now the market is actually trading on this level. The market is actually at this level. So the market closed on the weekly time frame with this particular week. That's why it's important to analyze from the weekly time frame whenever you want to analyze. So you can see that the last weekly candles closed and all of that. So you can see the week at which the market formed. Then we now on the opening of this week, on this particular week we are in now, this fresh week, you can see that the markets also give us a move to the upside. You can see this particular week we got here, the markets kind of gave us a push again. Like this is like let me explain further. This is like when we say the bulls try to see if they can be able to break above the zone, but they failed at this point. With this weak formation that we saw here, they actually failed. They failed to close above this level. They failed to close above this level or to give us a nice push to the upside. Instead, they're closing up with a weak, like this particular candle now gave us this weak formation. On how this week formed here, you can see that the last time the market tried to force itself above this level, it failed, creating this particular week. The same thing is actually trying to happen at this point. So these are information that we need. This is actually trying to tell us that the bulls are exhausting their buying powers. They are exhausting their buying powers because they got to this important zone, this important level, that we can see that at this point as well, the market pushed here, giving us on multiple touch of this level with weeks formation, like the formed weeks. The market created these weeks, these different weeks as I was seeing here. So let's identify it. You all can see these different weeks the market created at this point, and after this week's formation, what happened next? the market dropped downwards, and we're actually trying to get the same information here. Actually trying to get the same market move here. So because we actually use the past market moves to predict, like we use the past market moves to predict the market's future direction. Like we predict what's going to happen with the information we got on the past market move. So let's head on to the daily time frame. So in the daily time frame, basically that's those 2 weeks that we saw that formed are actually big body candles that you all can see. Let me zoom in. Those 2 weeks that we saw are actually big body candles. So on how those big body candles formed on the daily time frame, they also created weeks. Like they created this particular week, this week, then they tried pushing up again. That's the second week that we saw these bullish candles are actually candles that formed on the daily time frame, but on the weekly time frame they appeared to be seen as weeks that formed on the weekly time frame. So right now we are seeing that this particular daily candle, this is a daily time candle that will be closing in the next 24 minutes. This candle will be closing, and you can see how bearish this candle is actually forming, and this candle is actually trying to give us an information as well that the bear is actually in the market, but we'll analyze further to be sure or to get more information on this market formation. So next is to head down to the what, to the 4-hour time frame. But firstly, let's identify our levels on the daily time frame, our important levels. As you all can see, this level can be assumed to be our level, or can be said to be an important level in the market. Reasons are, you can see how the market reacted at this point, market reaction at this point, the same thing at this point, the same thing at here. So, and basically the same thing here, the market reacted at these zones. So, and at this point you can actually say that the market is actually trying to react at this particular zone as well, because we can see when last the market reacted here, it gave us a push, a downside, retested it again, then give us this massive drops, a downside. So on how the market has been bullish for some weeks now, for weeks or basically months, because this market has been pushing upwards since January. So on how the market has been bullish for weeks now, we can actually assume that the market has actually got to a point at which it's exhausting its bullish pressure or its bullish momentum. So on the, let's head on to the daily time, to the 4-hour time frame for more information that we need in predicting this particular market. So on the 4-hour time frame, we can see clearly that the market is trying to create a lower high formation. Like we got this particular high at this point, we got this high, but the market failed to give us a new high. Like the market failed to give us a new high, market failed to create a new high and retest, and like the market failed to give us a new high and retest the particular high, like and now to create a new low. Like the market failed to give us a new high, creating a new low, and like trying to continue its bullish pressure. But you all can see you all can see what the market is actually doing at this point. Instead of the market to create a new high and a new low to continue its bullish move, the market is actually creating what, a new low, a lower high, which is actually giving us a change of market direction, a change of market structure. You all can see at this point we have this new lower low, like lower highs. Basically you can see the high, the lower high. Instead of the market to give us a new high, it's instead giving us a lower high, a high that is lower than this previous high, which is the information that we need in analyzing this market, in predicting the market, the next market move. So on how we got this information we need on the 4-hour time frame, this lower high formation, this is actually another confluence that we need, that is trying to tell us that yes, there's a possible sell momentum coming in the market, because the market structure is about to what, is actually what, changing. So we are seeing that the market created a level, this particular level. Let me let's change the color of this to change it to blue, fill it up. So on this particular level you can see that the market is actually what, the market have been reacting on this level. You can see when the market got to this point, the market give us this break above this level, came here to retest it, give us a push, came back to retest it, giving us a push again, and the market is actually what, trading on this level. So what information do we need at this point? What information do we need at this point? you can actually see clearly that this is a level of support, a neckline basically, because we had this kind of a double top formation, not really a perfect one, but we can assume that it's a double top formation. Even though the double top formation formed with a lower high, which is actually giving us a change of market structure. So we can assume that this is a double top formation, and this is actually the neckline of this particular what double top. So you can assume that this once this level is broken, we can assume that this level is a level of support on the forward time frame, and whenever a support level is broken, it turns to a resistance level. So this is where our opportunity or our trade opportunity comes in. This is where our sell opportunity comes in, because we have actually seen that market is actually trading on a weekly resistance level. Firstly, the overall market direction is actually downwards, and market is actually giving us a change of market structure with this lower high formation. Then we actually have our neckline that is at this point. So whenever a support level, because we are actually assuming that this level is a level of support, so whenever a support level is broken, it turns to what? A resistance. So basically we'll be expecting a break of this particular level, based on due to the fact that the market is on what is on a weekly resistance level, and the market structures have actually changed from it's actually changing from a bullish market to a bearish market, with the lower highs formation that we are seeing at this point. So we will assume that whenever this support level is broken, it turns to resistance. That's actually the principle of support and resistance. So whenever the support level is broken, it turns to resistance. So we're expecting a break of this particular support level, then the retest of it, a proper retest of this level. Expecting a break of this support level, then a proper retest to short this particular what index, because you have seen everything that the market structures actually was changing. So what information do we need again than this particular information that we have seen at this point to give us a nice trade opportunity? So when we'll be shorting this index, where will be our target level? Where we will be expecting the market to stop or reverse or stop selling off. So we'll be expecting this level, which is an important level as well, because you can see how the market reacted at this point. Market reaction at this point, the same thing at this point. And basically, if we still move further, we could also see that market have reacting on this particular zone. So we're expecting the market to give us a move downwards to this particular point. This is actually a level, our next target level, this next level of support, because we can assume that this is actually a gap. And whenever a gap is created in the market, we expect the market to come refill it. So it's another confluence that we need. It's another information that we need to short this particular index, but we won't be shorting it on the forward time frame. So we have to move lower to basically the 1 hour, the 15-minute time frame, to look for market opportunity, to look for market structures or market confirmations for a nice sell off on this particular index. So 15-minute time frame possibly will be a best level at which we'll be looking out for to short this index. So we will be watching closely on this particular index to look for a nice sell off at this zone. So this is basically how we take advantage of support and resistance levels. But firstly, before taking advantage of these levels, we have to first analyze the market overall market direction, spot our key levels, our important zones in the market, and then wait for market confirmations or market break of those levels, then a retest of those levels to have our trade opportunity. So basically we're looking up to the 1 hour time frame perfectly for a nice break and retest of this particular zone to sell off this index. So I think that's it, guys. That will be all. That's how we actually take advantage of the support and resistance levels in the market. So you hope you all got a couple of things, my explanations and all of that. So to my new viewers, you guys should do it to subscribe, and to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, and do have a wonderful day, guys. Peace out.